Hey, everybody. Glad to be back with Bill Holter. And for those of you who don't know who Bill Holter is, he's been one of the original banksters of sound money with GATA. These are people that actually took the time to form an organization and point out the nefarious activities of government through overspending, creating inflation, and the undermining of sound money, along with Jim Sinclair. Bill is, as I say, one of the originals. So we're very glad to have him back. Sometimes in rocky times when the water's real churned up, you need to see something that's standing still, a rock, kind of like a rock of Gibraltar. People that are not moved by fake outs and all sorts of funny stories. You need principle and you need someone focused on sound money. And Bill was one of those rocks. So we're very glad to have him back. Bill, how are you doing?
I'm well, Francis, and thank you for mentioning GATA. They started in 1999, and I mean they were talking about the manipulation of gold, which really took off starting in '96, about 3 years earlier, with Robert Rubin's strong dollar policy. And I mean they've exposed so much over the years. Uh, the community owes a lot to GATA.
I assess that. I was a follower, actually. I didn't know you by name at that point of GATA because I was suspicious of all the things that I've been suspicious. And you could probably say that GATA was an earlier influencer over me in terms of key principles and sound money and all of that. So a big thank you for your work. Let's start with a question, though. Where are we right now? And tell us also in that answer, if you don't mind, what's going on in the silver market in terms of contracts above ground and all of that. But first start generally and then touchstone off on silver.
Sure. In my opinion, I think I believe that we're back to where we were in 2019 in the fall, where liquidity was tightening. Liquidity tightened, and then of course COVID came along, and that was quite convenient because that gave central banks all over the world cover to print trillions of dollars. So we went through COVID. We had another massive reflation that was created or done with the use of more debt. So the problem in 2019 was way bigger than 2008, 2009. The problem today is way bigger than 2019. We're back to Richard Russell's inflate or die moment. Either they print and borrow, buku amounts of capital of debt, or the system collapses and we have a deflationary spiral. Regardless of whether they reflate or not, we are going to have inflation of the things you need and the things you have, and you're already starting to see that. You can certainly see it in commercial real estate. The things we have are and will deflate. And when I say deflate, not necessarily in dollar terms or euro terms or yen or pound, but in terms of gold, rock solid money. In real terms, we're going to have deflation of the things we have, and inflation. It's going to cost more to live. The second part of your question was silver. I think it's pretty obvious at this point. I mean, we're looking at what? Probably a 400 million ounce deficit between supply and demand. And it's been that way now for 3 or 4 years. So the final failure to deliver that I've talked about for many years, I think we're right on the precipice of that. I've always said that I thought it would start with silver, immediately spill over to gold. And once you get the gold and silver contracts fail to deliver, that's it for the entire derivatives market, because that market runs on confidence, and a failure to deliver exposes the fraud and will break the confidence.
There's so much interesting. I had a couple of thoughts sparking. I'll go back to part one. I suppose I should have split the questions up. Part one on your explanation, 2019 repo vibes that you were referring to, which actually I get the similar vibes. The only thing I would ask and drill down a little further on is it is different this time in terms of where American bond market is perceived. And that's the big differentiating factor. And America has always printed for the world. That's almost been its primary export in some senses. CV19 was no difference. And I'm wondering if it's not going to be a globalized crisis. But if you look at the interest rates where they are low, say, for example, in China, obviously the Swiss have, they're at 0% on the SMB again, but I would say the big economy would probably be China, where they're at about 1.9, 1.6 point. The US can't print for itself, let alone for the world this time. When you're sitting at 4.5% or 4.25, is it, on your Fed rate? So will it be a crisis that maybe comes out of somewhere else, and somebody else has to play the hegemon's role on the basis that there's not going to be enough money, not enough buyers of the investment? Typically, we've had extreme fear. If you go back to CV19, and I think this is a really important point, so I'd like to delve down on this one. We crashed the stock market, remember? We're at all-time highs right now. I don't think that's long-run sustainable, but when you measure in gold, it's not as impressive as it sounds.
Right.
But when you go back to 19, we crashed the market. Bitcoin went for it had been as high as 14. It was sitting around 10. It spilt to 3,999. Everything got sold off. There was a dash to cash. And the only market that was essentially the monopoly that got to be in, it was the Amazon that stayed open to retail when all other businesses were shut, was the bond market. And you had a flood into there. And they got away with that proliferation because simultaneously they created so much fear that the rates dropped so low. They were able to cut rates and drop rates. And there was still that bid in the bond because all other asset classes flooded out and bonds was the only man standing. Not because of quality. It's a bit like a lady. She's going to have to marry the only man in the world, regardless of how he looks, if there's none other. And that was the bond market's role during that period. Now, of course, we have a runaway gold market, a runaway silver, well, soon to be, and certainly perking, a very strong platinum breakout, all of this going on, and a world that's turned a jaundiced eye on debt markets now. And that's a big pivot. That's a big pivot for me. And does that mean the crisis has to come from a nation that actually has low rates, can cut, and does production now, like China, for example, and would print for the world? Or how does it play out? Because who's going to buy the debt if they do a QE? That's the big question that's in this repo vibes that has the parallel to CV19 that I concur with. It can't play. The mechanics have changed. It's almost like that engine has been disconnected. The ability to raise and proliferate by exploitation of the debt markets has now been debased to the point that nobody wants to play the game anymore. What's your take?
Yeah, I think I'll give my conclusion first and then work my way back to that. The conclusion is there is no white knight this time. Every financial crisis we've had going back to, well, I guess you could say going back to 1973, 74 even, there's always been a white knight that could come in. There's always been a central bank that could step up and lend the money. 2008, 2009, the white knight turned out to be the balance sheets of these various sovereign nations and the central banks themselves. The problem is they've blown their balance sheets up, the treasuries have, and the central banks have blown their balance sheets up. I mean, the Federal Reserve has got a negative equity position right now. The same could be said for Bank of Japan. Same could be said for the European Central Bank. They're all broke. They're all busted. Their balance sheets are in shambles. There is no white knight this time with the exception, theoretically, they could blow gold to 25,000 an ounce, 50,000 an ounce. The white knight would be the central banks that hold gold, and then their balance sheets get reflated.
Yes.
But that said, $25,000, $50,000 gold completely breaks confidence in the credit markets and breaks confidence in the currency markets. And that's exactly what where we're headed on a global basis, is that this is going to be a currency / credit crisis. And there's going to be a complete rethinking of what the foundation is to the financial markets. Right now, the foundation to the financial markets is debt, primarily US debt that's held on central bank balance sheets. But that is the foundation. And debt, if you want to call it sand, it's a foundation of sand. Whereas gold has a foundation. Gold doesn't go up and down in price. It's the currencies that go up and down, and primarily, long term, all currencies go down, and long term, gold goes up in those currencies. So I think that's my answer, is that there is no white knight this time. The problem is they're going to try to reflate. And like you said, who's going to be the buyer? Because we're already seeing China, we're seeing Japan, we're seeing other nations liquidate treasuries at a time that the US Treasury has the biggest appetite in its history, simply because, well, if for no other reason, because now we're paying $1 trillion a year, over $1 trillion per year in interest alone. So that's a confidence breaker. But at the same time, from a fundamental standpoint, you've got foreign central banks, sovereign treasuries liquidating US treasuries. Who's the buyer? And the buyer ultimately will be the Federal Reserve, and it will be outright in-your-face monetization.
I concur with so much in that response. I feel this is the crisis to end all crises. It is the end of this is the end of the debt-based. And I get a bit called out for just seeking a doomer headline to try sort of get more attention, or, you're just an attention seeker. This time it's really the big one. And everybody will just go, they'll just print to go, brr. They always go this, as if this is something that works all the time. They don't see that, they don't fully understand the mechanism of the system, that was the exploitation of a debt-based system. That's the cycles changed. That call late 2020, that's the end of the bull market as it is an acceptable reserve asset for that 4 decades. It's over now. And now that secret is an open secret, and it's very well endorsed and clear. And there's a much more jaundiced eye on this. So this is reset. This crash is the big one. And that's probably where everything comes. Go ahead.
Yeah, and to that point, you can actually see it with your own eyes this time. And when I say this time, historically, always, the bond market has always followed what the Federal Reserve, the bond, I shouldn't say followed, because the Federal Reserve in some instances follows the credit market. But what happened a year ago was the Federal Reserve lowered interest rates 1 full percentage point. I think it was in 3 cuts. Yet, what happened to market rates? Market rates went up 1 full percentage point. This is the first time in the history of the Federal Reserve, going back 100 plus years to 1913, it's the first time where the Fed acted, but the credit market did the opposite. Yes. And that tells you that the Federal Reserve is losing control of the yield curve.
Everyone thinks it's all about what Jay Powell and his committee decide the rate should be.
It's not.
It's what markets decide, what they can sell to markets. It could be. And those things are diverging, and the rip was on. The other, I love that reference, and we made that point as well. And I remember the period you're referring to, it's not that long ago, where in fact you went 1% up. This is also about not wanting to originate new debt, banks, and they just disagree. with the Federal Reserve, and they're protecting themselves. If we're to borrow, we want bigger deposits, we want fatter margins, and we're going to underwrite you far harder. And then you can borrow some money, but not near as much as you would like if you qualify and meet all those criteria. And in actual fact, we're going to charge you more for the privilege because we're underwriting for risk nowadays on a far more serious basis, working on a far greater economic contraction. So banks are pricing in reset in a way by saying the probability of massive job losses and all sorts of things. We don't think that rate is compensating us for the risk we're taking of losing money with you. And that's why you've had 42% of refis on properties rejected, and you've had 36% on car loans rejected. They're on seeking to originate debt as a product because they can't sell it on to anybody else. There's too much of it. So they're going to have to sit with the risk on their own books, and then they look a whole bunch harder. It's not like the securitization of subprime where you didn't care. The robot signing handed over to European banks. They'll go toxic with it. They don't even know what it is. The agencies are going to give it AAA. Nobody's too worried. You played that game too much. Now it's on you. So there's that point very much, and the pricing going up. Another point that I like to bring, because there's a lot of people that are falling into the dollar milkshake supremacy, dollar spike based on interest rates going up. And I want to highlight the loss of faith that occurred during that peak window of Trump tariff tantrum, where in actual fact, the rates went up and the bonds dropped. They were sold badly as Trump was pushing the crazy percents on China. I don't know if you recall this. And the dollar sold off viciously. So you actually had that key moment. And what was the asset that went up during that time frame? If you want a microcosm of the big tell, when the stress hits the fan, the real stress is there. Gold spiked, dollar down, bond rates up, and all the theses that talk about a miraculous spike. It can happen. It could happen if externally everyone. But people need to be warned. Just because American rates spike does not mean that the dollar can only go up. And that was a big loss of confidence in corporation USA. And it was Treasury sold and the dollar sold and funds leaving the USA. And America is very reliant. You just have to look at the stock market caps. 63% of global stock market caps. In fact, I'm going to show you. You love an image, Bill, and I'm going to just share screen here as well because I think this is fascinating and you're going to appreciate it. You probably know it already, in fact, given what you deal with on a day-to-day basis. But I want to show you the stock market caps chart. 63.8%. Let's go to this. This is Kabisi's letter. Give them a follow if you. There are lots of good tweets that come out there. U.S. stock market percentage globally is 63.8. You've got, I think that's DM Europe. I'm thinking I need to think Deutsche Mark Europe.
Developing markets.
Developing market Europe. Okay. So that's the good part of Europe. China, HK, that's Hong Kong and China. They're about the same at between 17 and 18, called 19%. There's only the future, unfortunately, is that this Manhattan, this huge green Manhattan, dissipates immensely, and more of it ends up being shared in some of the others as the US goes through what it's likely to go through. So we're going to be interested to get your comment on that. But the other part I wanted to dig down on, because you mentioned people selling, China was selling. In actual fact, some of the biggest selling in America during that window that we mentioned, when the dollar went down on rising rates and collapsing debt, a lot of people think, and I straight away had certain YouTubers saying it was an attack by Japan, it was an attack by China, it was the Europeans that did it. You know, you've got to find a perp, as if you need a perp. You put yourself in a precarious position and you've fallen over, and now somebody had to have pushed you. But anyway, the interesting stat that comes out of this chart that Holger has put out, also a good follow, by the way, on X, is actually shows that the biggest divester from America was American money. that comes as quite a shock to some people. In other words, those 1%ers and those 10%ers are relocating assets somewhere else. If you have a look at this chart with me, Bill, you'll see that US investors buying US, you can see that's gone negative over here in the orange. That's the fat orange one. And in actual fact, EU investors buying Europe is positive. EU investors buying US, the thinner one, is still marginally positive, not as much as buying their own, but is still marginally positive. And if you look at US investors buying Europe and finding Europe cheap, it's a far higher dashed line. So Americans selling America and buying the cheap European market. This is also an interesting one, local versus international fund flow.
Francis, on that chart, I think that chart kind of illustrates why they just relaxed regulations on banks, which freed up 5.5 trillion on their balance sheets, because the American banks were not buying treasuries like they had, and this will give them firepower to do it. But I mean, basically, we have a banking system now that has no reserve requirements.
It's incredible, isn't it?
Yeah.
Well, you've got a negative Fed balance sheet, as you just argued yourself. So why constrain the others if you don't have to have it, and you need their liquidity that goes with it? But it's interesting because a lot of people position any bad window of adverse financial events occurring in the US as attack vectors from offshore. Believe you me, we've given China and Russia, who I actually think have been quite patient with this Ukraine war and a lot of things, plenty of reason to attack, but the fact doesn't even hold that up to be the case. They're almost doing the Chinese same, just lie on the river banks long enough and your enemies will wash by.
Right.
They don't have to actively put a hand on a dagger in any way. Don't do anything stupid. And don't stop somebody else from doing stupid things that they show quite a lot of capability in doing.
Well, Francis, as far as China and Russia attacking the U.S., it would cost them not even a ham sandwich to do it. I mean, if they put together $25 billion, that would completely clean out COMEX silver, COMEX gold. Everything would be delivered, and you'd have many contracts standing for delivery that could not be delivered on. And for nothing, with no shots being fired, no bloodshed, the American way of life would be over, because that would be proof that the fractional reserve system is fraudulent.
Yeah.
And $25 billion in today's world is nothing. Actually, $25 billion today is, call it 4 or 5 days of U.S. debt accruance. I mean, we're accruing what, $5 billion a day?
Yeah.
Between interest and new borrowings.
In fact, Putin was recently reported to say, with regards to the treasury theft, which was $300 billion,
right,
that actually represents a small price to pay for them developing a second way and a second system. Exactly. And actually, he's seeing it almost as a bargain. He said, look, you did this, and here's our development. And they already have a funding and a financial system. And of course, Iran is trading in the yuan now for oil, and all the things that people said, well, China doesn't have any trade in its currency, all of these things. Slowly but surely, these things are coming into place that feels very much replacement.
Yeah, that's when the end game started, was October of 22, when the $3 billion was sequestered. The rest of the world looked at that and they said, hey, wait a minute. If the U.S. can do that to Russia, they can destroy us. And that changed the mindset of the U.S. Treasury market being the safe haven of the world. And all you got to do is look at a chart on gold, and that tells you the whole story right there. From that point forward, gold turned into a tractor in first gear and just kept going and going and going.
Yeah. Yeah, and interestingly, it's going to be this will probably go out, Bill. By the way, we're going to let this go out on the 4th of July. To all our American friends, I'd like to wish you all the best as a US citizen on almost America's birthday, for want of a better phrase, and everything that goes with it. But I would also say, take a lesson, put this video on while you're barbecuing and having your quality of life, and take a note that a message from myself and Bill Holter is that your standard of living is going to come under attack through virtue of the policies that the government that is in charge has pursued. And in 5-10 years' time, you'll look back and say, wow, these guys were telling me how it was going to go down, and I didn't take enough action, or I did. Thank God I listened. Share it with your friends. Play it during dessert time. It might seem like a little bit of a darker moment, but there's real opportunity. And I want to focus on the opportunity side for Americans in this. By not going down with the rest, the downdraft, the fall of a hegemon is the highest. This is the problem I also have, because we have a lot of US support on our channel, but every now and then a small percentage think I'm picking on America and I'm wishing it, or I'm willing it. And every time I go to America, I love the people, I love the country, it's beautiful, it's great. I don't want that. I don't want communist China to be the winner in this game. I absolutely don't. But I will tell you exactly how I see it. And the fall of a hegemon is always the guy on the highest ladder. The United Kingdom is doing terrible things. It is wrecked everything it's doing. You can point to that. You can point to China's property market and everything else. But you are on a 26-foot ladder and they're on a 3-foot one. And when they fall backwards, it's the hegemon that gets the biggest downdraft for the sustained period. And it's not being anti-American to say that. It is being honest and straightforward. And you've got to take protecting yourself far more seriously. You're going to face a far harsher downdraft in your quality of living. And what would you say? Am I beating up on you guys, or is there something in what I'm saying?
No, you're not beating up on anyone. You're just describing the math. Math doesn't lie. And the bottom line is, Americans have lived far beyond their means for 50, 60 years. I mean, go back to, well, till right after World War II. America has lived beyond its means. It had basically an unlimited credit card with no limit, and we've lived off of that. Now, the reverse of that, not only do we have to come back to living within our means, but to pay back the previous overliving, overstandard, whatever you want to call it, we've got to live below our means. So the standard of living in the U.S. is going to, and I'm not picking on the U.S., but it's because the standard of living is more outsized compared to our means than other nations. So our standard of living is going to drop further than anyone worldwide.
Yeah.
But don't make the mistake that the entire world is going to have a standard of living that drops. Because paper is going to blow up. The naked king moment is going to happen. And when people, the little boy points and says, hey, the king's naked, doesn't have any clothes, everybody worldwide is going to be looking at currencies and say, hey, wait a minute, I've got this, or I've got that, or I'm selling whatever, but I'm not taking that paper. That paper is worthless. And when I say paper, I'm talking about currencies all over the world. The fiat experiment has and is failing.
Yeah, and the king fiat is the dollar, and an anti-dollar trade is buying gold.
Exactly.
XAU USD. And you're not being anti-American, and you're not being unpatriotic as an American by saying, have back this paper. And I'm not hating on you by telling you that either. I want you to do that. I want to save you. And too many people personalize this.
Protect yourself. No one else is going to do it for you.
100%. Government is actually the enemy in this case. They're the perpetrator. and you have to do defense. And the solution they're bringing is going to be probably the introduction of an entire new system on the basis of, we tried capitalism, that didn't work. We need something more equitable to build back better. You know, can you picture them with the pitch, Bill? Can you hear those words? You know, capitalism failed.
It will be central bank digital currencies. That's where they're going to go to next. Yeah. And I've maintained that during good times, or quote, perceived good times, they won't be able to bring a central bank digital currency anywhere or worldwide. They have to do it during massive stress. So they will allow these markets to collapse. The great taking will take hold. People are going to lose. They're going to lose their assets. Yes. You know, whether it be a bank, a broker, insurance company, whatever. And at that point is when they will try to introduce the CBDCs, because the public will be begging for help. Yep. So I think that's 100%. The next move, is CBDCs before we get into really crazy stuff. You know, capitalism was the root of all evil, blah, blah, blah. You know, we got to have socialism.
But that's the media spin we're going to get. And this is another thing that I like to talk about, because I think you're one of very few that actually see this as a guest as well, is that those that have protected themselves don't expect to be loved for that. In actual fact, your government's going to hate on you for it. Right. And you're going to be blamed as part of it. The gold bubble, the pet rock guys broke the dollar. They did this. By pursuing sound money and stepping out of a broken system, they're going to blame you. So here's the message I was making I sort of recorded a video on my bicycle today, a letter to my friends in America. Watch out for it. It will also be going out sometime this week. And the key thing about this, when you have downturns, governments don't become more meek and apologetic. They become more totalitarian. They become more, and the lies become more bold-faced. The deception is more overt, and the brutality which they are rammed down your throat more absolute. So this is not only a loss of money and soundness and all the hegemony and all the power that went with it. You're getting a CCJ, what we'd call in the UK or whatever. You're getting, bad credit, and you're having to pay off all your creditors now and live well below your means so that you're paying back that negative, not only living at your means where previously you didn't, but actually living at your means and carrying a burden that you weren't previously being made to carry. And at the same time, you're going to be whipped and flogged and told how you did this. Your overconsumption, buying everything from China, brought this about. There's transgenerational aspects to this, which involve the boomer generation and the service contract potentially for welfare, Medicaid. Those things will probably come under scrutiny and maybe reneged on under a totalitarian type vibe, because no party that is elected is going to do that. But eventually through force of pain and suffrage. And that tells me the problem they're going to create is going to be one far worse than we've ever had. And that CV-19 with lockdowns is actually just a very light version drill of what we were going to have to face.
It was a test.
It was a test. It's a drill. It's like I treat long-term capital bailout as a test for the subprime. Everything gets drilled in a microcosm first, in a small version. That's why I look at this. That's why we said Liz Truss, Kwasi Kwarteng, when they couldn't sell, they couldn't meet their pension requirements, led to a pound and debt collapse on rising rates, that would happen to America. 2 years later, from 22, you had Trump tariff, and they found the point where that happened. These are all tests, Bill. And it just sounds like we're too doomer. We're looking for a black pearl headline for people that dominate their doomer porn, But how can you say, if you are rational and you're placing it, what kind of government existence are you expecting? Is it going to be more draconian, more totalitarian? Is it just me that thinks that in an environment where they can't pay for things they promised? Then you're going to go into tax scavenge mode, which is a phrase we've created because there is no debt funding system anymore. No one's going to lend to the American government. There's no one who's going to buy that as an asset. So suddenly, not only do you have to live within your means, you have to do cuts. I mean, I love the parks. There's beautiful toilets. You go to a park, the roads are empty in Moab and all of this. It's a beautiful country. Now it's going to be, you're going to go from having 5 guys deciding to do single ply toilet to save a bean to having one person managing it, dirty toilets. That's standard in living, the services, everything. The money's got to go. How does it not get more totalitarian to get people to accept that and to watch this decline? What's your take on government conduct, our take of scavenge mode, and they're also the more draconian or totalitarian? Or do you think more apologetic and sorry, guys, we screwed this up?
No, you were right at the very beginning where you said people who have bought gold and silver are going to be, they're going to look like villains. Right. It's going to be blamed on them. And I would say anybody who bought gold or silver over the last 5, 10, 20 years or longer even, they did so to protect themselves and to protect their families.
Yeah.
The problem is the math is so bad and the math now is so obvious that you've got more and more and more investors worldwide that are coming to the same conclusion, coming to the same answer, and collectively they're creating a supply and demand deficit. The demand is increasing. Supply, I mean, mine supply is not increasing any longer. There's not been any major discoveries or finds in the last, since 2011, 12, 13, so over 10 years. So the buyers or the holders of gold are going to be villainized. They will be called victims, or not victims, villains.
Perpetrators, and government is the victim of them creating a bubble. I'll just interject before handing straight back to you, Bill. There's already been a headline in Europe that the gold boom could be a threat to the gold bubble. Sorry, they used the word bubble. Gold bubble poses threat to financial system. You see the framing there. European headline, by the way. I think it was EU.
For what reason?
Of course not. You and I both know that's the reverse framing. But I'm just telling you, there's an exercise that's already giving you a microcosm of how they are going to say, you get rock, guys. Chase the market up so much you crashed a very good system here because you created shortfalls, and because of legacy ties it broke our system. There's going to be no acknowledgement. There's going to be no Truth and Reconciliation Commission about the pursuit of unsound monetary principles. There's going to be a lot of attack on people that survive, and they need everybody down in serfdom if they want to bring a CBDC, UBI, basically Bolshevik communistic system with technological overreach. And anybody who has become self-reliant is actually a problem because he's showing the other citizens a better way. And that's an issue when you're trying to create the supremacist class, the ruling class, and everybody else. That's our take. I don't know how you would end that.
But it was not done collectively. This was not a plan by gold buyers.
No.
This was a bunch of people that wanted to protect themselves, protect their families.
Yeah.
And when you add all those buyers, all those people that made a decision that the math does not work in a fractional reserve system that has no backing to the currency, people made those individual decisions. And when you add them together collectively, it is a problem because, as I said, I think very early on, a low gold price shows confidence and a high gold price shows a lack of confidence. And if you got gold going to the moon, it's a thermometer. No matter how hard they've tried to break that thermometer since, well, really before this, but since 1996, they have tried to break the thermometer and have it give the world a false reading. And that false reading, they did that in order for confidence to remain and the US Treasury's credit card remain open. But $10,000, $20,000, $50,000 gold, that credit card gets canceled.
100% love that. In fact, I'm talking about tampering with the true measure, the temperature gauge of gold that you referred to, which I love. In actual fact, on every point in the economy, there is tampering. And my favorite one to mention is inflation, where in fact, not only do you get shrinkflation, where your 225-gram coffee package is now 185-gram for the same price, but you're getting lower quality. They might mix in a Robusta bean instead of the Arabica, which is cheaper. So you have a blend instead of a pure. But there's also now skimpflation, where on all services and everything they're charging the same price, but much less services, much less.
Right.
Hey, it's a gym. You don't get the towel, you don't get the laundromat, you don't get the free cologne if it's a high-end gym. If it's a services company, there's the call centers. You only get robots or AI, a chat on some AI bot that sends you a link to a website, where previously you could speak to someone or they could intervene and get a manager who could actually do something or change it. You're getting all this automation and AI and some of these things which are actually low cost and not yet full service quality. And you're getting the quality switched out. So we're getting skinkflation, shrinkflation, and then you get the outright BLS lie, which is still a lie, which is refusing to compare consistently since 1982, for example, like Shadow Stats does, the same basket all the time. So it's very difficult if you keep changing the basis of comparison and you keep removing inflationary items and putting in low inflationary ones to actually argue. Or you add the technological advance of a higher, more pixels on a phone as being, but it's not the same item. You're actually getting a better item. And all of these tricks in the BLS stats. So it's fascinating that you mentioned that. The gold price is your inflation rate. That's how I see it. And it's not perfectly that, because people drive the price, but it's the degree that it moves over a long period of time is your aggregated mean when you draw a straight line, your true inflation, and not what the BLS tells you.
You're describing the results of inflation. Inflation, look in a dictionary. Inflation is not prices going up. Deflation is not prices going down. It is a monetary event. And because sovereign treasuries, and obviously use the US Treasury market, the more the government borrows, the bigger the deficit gets. That's more money in the system. That's more money chasing the same amount of goods. That's your definition of inflation, is the supply or lack of supply of
money. No, I 100% agree on that. I'm just talking about the inflationary measures that the consumer comes across are not even honest in their own mechanism. You and I know the increase in money or overspending governments and issuance of debt are inherently inflation.
What you're saying is we are bullshitted 24/7.
Yeah.
Regarding finance, regarding all kinds of things, but
yeah, I agree with that. So, given that, tell us. Let's just take a step back to the silver, because we drilled down on that very first question, or very much on the first half. Let's try and understand the numbers because many people are going, you guys, you prattle on YouTube. You have been saying this for so many years. It's kind of the snail that crosses half a brick and then it crosses half what it did the day before. It's almost like that day never comes where it finishes crossing the brick. And I'm saying the snail's at the end of the brick. This is it. Go over the numbers again mathematically. What is, if you wanted a simple maths, and we talk a lot about simple maths, you mentioned the phrase here yourself. What is needed annually for silver productive use, like solar panels and all of that? What's typically taken by jewelry, and what is currently above land, and what is production? Let's just do the simple maths.
Yeah, the demand right now is globally is roughly 1.3 billion ounces. When you add in all the medicinal uses, technological,
Hello.
military. Don't forget military. I mean, each tomahawk has over a monster box in it.
Yeah.
So if you add all that together, you're about 1.3 billion. If you look at global supply, it's about 850 million ounces. So you're talking about literally 450 million ounces, which is about 50% of what production is. Now, as far as above ground supply, those numbers are very, very difficult to discern, but we do know that all the big supplies, for instance, the biggest one back in the 90s, early 2000s, was the unwinding of the Manhattan Project. That was about 2 billion ounces that slowly flowed into the market and kept supply available and pricing under wraps. I don't know of any huge above ground hordes that can meet this. I mean, I think we're running head first into a failure to deliver because there's just simply, in a game of musical chairs, there's simply not enough chairs.
So just going back 1.3 billion, which is 1,300, we use 850, I think you said, was it?
Right.
And it's 450 shy.
The supply is 850.
Yeah, sorry, supply. I meant to say supply is 850, 1.3 billion, 1,300 is consumption. We were talking in millions. 450 is the shortfall, and we've been draining that, whatever that supply is, that we have an X number on, which we think the biggest contributor was a project. Now, when was the Manhattan Project? I mean, that feels like a long time ago. We're talking atomic bomb stuff.
That's 80 years ago.
Yeah. So that 2 billion actually is only 2 years of supply anyway.
Right.
1.3, it's barely 2 years, not even 2 of not supply. Sorry, I mean of consumption. It's 1.3 billion. If you had 2 billion,
it would go to the 850.
Yeah,
and it's a whatever supply is coming on from above ground hordes is on the margin.
Yeah. So the problem is we don't have a finite number of what's in the vaults really for industrial use. That's our key problem. But we know that whatever there is,
how much of that is available for sale at these prices?
Yeah.
I mean, the old story goes, oh well, there's just not enough gold in the world to create a gold standard for all the currencies. Well,
just add the price.
Of course there is. If you had 1 ounce and if it was priced correctly, there'd be enough gold.
Yeah. No, that's right. It's the price that has to move. So it's difficult to work out when. That's the big question that everybody asks. When everybody wants to know,
it's happening before your eyes.
Yeah,
the market is front running it.
Yeah, and we're seeing a buoyant silver. We've seen the gold silver ratio come back to 90 from 100, but it hasn't spilled yet below that. What else would you ask, Bill? What else would you like to say to our viewers? We've got, as I say, a big wish from us all outside the world to our American friends for July the 4th. What would you like to include in your July the 4th message to your fellow American, assuming on a barbecue on Friday or on Saturday, whatever happens that weekend, everybody is watching us on this YouTube? What is your presidential address to your fellow American?
I mean, I'm not sure it's the right day to do it, but I mean, you've got family, you've got close friends gathering around, and I mean, I would have the conversation of making a plan. I mean, if you haven't made a plan yet, you got to make a plan, and you got to make a plan with friends, with relatives. You got to know what you're doing or what you're going to do, how you're going to react. I mean, how will people react on a Monday morning when banks don't open? And when banks don't open, nothing works. I mean, you could go to, Dunkin' Donuts or whatever, and well, sorry, your credit card's not working. Because if banks are closed, nothing's going to work. So, I mean, I would, and again, I'm not sure 4th of July is the right day to do it. But make a plan with your friends and relatives. have a hard, fast plan and act on it. Just don't think I'm gonna, because you have to do. Protect yourself. No one else is going to protect you for you.
And
Especially
when we say have a plan, what we're actually talking about is a far more serious event than even the lockdowns were in terms of lack of availability and anything else you've experienced. It's almost a once in a lifetime crackdown. That's like such a problem, and going to need such a reaction. And so many people are going to fare so differently depending on this. So it is an apocalypse plan. It's not a small plan. It's not okay, I just got to have a bit of extra cash in the drawer and 5 gold coins and I'm going to be just fine. It's everything that goes with System of a Down apocalyptic plan.
It's everything to do with how you survive, how you live. I mean, if grocery stores aren't open, I mean, if the credit system, when credit goes down, nothing will operate. And I question whether or not electric companies will operate. I question whether the water companies are going to be able to purify water. Everything that you do on a daily basis involves credit. You may not think so, but everything that you do, you pump gas. Well, how did the gas get out of the ground? Or the oil get out of the ground? How did it get refined? How did it get brought to the gas station? There's credit used on every single movement. A loaf of bread, there's probably a dozen different uses of credit to get the wheat or from the field itself to the grocery store. There's at least a dozen uses of credit. If credit fails, the availability of goods will completely stop. And at that point in time, you will have what you have, and that's all you're going to have.
It is musical chairs. The music's going to stop, and whatever you got is what you got. And
Right.
Nothing else can be drawn down thereafter. No grid, no mobile network, potentially nothing for a while. It's going to be chaos. Yeah, and I actually think it's a great day to do it. Unlike you, I think it's a sober July the 4th, maybe even, an early recognition of a potential death of a seriously ailing pensioner who's possibly going to pass, and all that goes, all the trust fund support he's provided, and a dawning that there's a new realization. And the truth of the matter is, those that prepare well will be relatively far wealthier than those that haven't. And that's the challenge. Winning in a game of challenge, real challenge. It's going to be a challenge. You can't sugarcoat this. It's going to be a big challenge like you've never had before.
Yeah, that's what reset is. Reset is not just the price of coffee versus wheat versus gold versus stocks versus bonds versus whatever. The reset is going to reset various people in different walks of life. I mean, you're going to find some billionaires that end up with nothing, and you're going to find some people who have, they've got $100,000 net worth, and they'll be relatively wealthy if they own gold and silver. Less than 1% of the population in the United States owns gold or silver. Yeah. So you're talking about 99% has no gold or silver, and less than 1% does. That less than 1% will have wealth, and in some instances, if they have enough metal, they could actually be literally banks on their own.
Yeah, and the chaos is, it's our job to get more people onto that. It's not good that we just look after ourselves. That's why we're doing this. We're broadcasting it, because for every guy that buys a family an ounce of gold and 10 ounces of silver, that's one less rioter looting the store, and one more member of your community protecting your birds where you live. And you want to coagulate together, and the people next door to you are probably some of the most important people. So 4th of July, Americans, bring your neighbors to the barbecue for about a real dour message, and get them to take action to save yourself. It's not just arms and bullets. Get them onto sound money. That's the message from Francis Hunt and Bill. Anything else, Bill, that you would like to let anyone else know, and also how people can engage with you for further misses?
Yeah, you can go to my website. It's just billholter.com. If you want to contact me directly through my business email, it's bholter@proton.me. If you do go to my website, I would urge you, after just having this conversation, there's an icon up top. It's called Grizzlys Corner. There's many articles that were written by, as far as I know, of the people that I personally know, this guy could survive. I mean, he used to go into central Idaho for 6 months at a time with a pack of mules. I don't know many people that could do that. And there are many different links on, where you can buy this tool or that tool or whatever. He's done a wonderful job, and we appreciate Grizzly because he's put some really good information out there.
So some hard prepping as well. I'm one of those guys that goes on to the Alaska guy who goes and sleeps 3 nights in the ice and the snow and cooks meals and hunts and shows you how to build a shelter and a hut. And I love that stuff as well. I fear my skills, though, are very much need more work. So we've all got something to work on. We don't present ourselves as the paragons of virtue of everything, but we do understand where we're going. And with that, Bill, I'd like to thank you very much for coming on. It's been hard-hitting and fascinating as well, and also for your previous work in GATT as represented, helping bring people around to sound money principles. Now it's time to you, the viewer, to get everyone else on board, owning gold and silver as part and parcel of your financial sovereignty in these times, and start looking at the column that Bill just suggested as on his website and in the links below. Thanks very much, Bill. We look forward to having you on again.
Thank you, Francis.
Tired of profit wipeouts and blown accounts from following trade signal groups? Looking for a better way to trade? Why not be part of a principled, structured, and technically based community set inside a unique trading methodology? Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser or app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time, and with focused effort, you'll begin to look at charts, price action, and markets in a whole new light. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.